Okay, great. Thanks, Brandon, and thanks, John, who checked off there. Very excited to participate in this. Thanks to Joanne Jobin, who worked so hard for us, and now has teamed up with the Follow the Money guys to put on this Investor Day. So we're excited to participate and want to jump right into the presentation since Frank took up a little bit of our time here, but we're happy to be preceded by Frank with all his excitement of gold and his very positive view of the royalty space. So with that, we'll jump through our forward-looking statements. As a junior royalty company, we are sure to make a few of those as we go through the presentation and jump right in and talk about why to invest in Ely Gold Royalties. One of the key things of us is our Nevada focus. That's where our roots are. We proved that again today with an acquisition from the old famous prospector Ken Snyder. We bought a package of 3 royalties from him. This all had to do with Jerry Bachman, our president of our royalty subsidiary in Nevada. His relationships, he did it with the VEK transaction, and now again with Ken Snyder, picking up these royalties that these old time prospectors have. But so at that Nevada focus, which also we think is very important, and over the next few years, the jurisdictional question is something that's going to come up time and time again, and we like being Nevada focused with that secondary focus in Canada. And also we are gold focused. This is a function of Nevada. While it being called the silver state, there's not much silver coming out of there these days. It's mostly gold. So while we have nothing against silver and probably wish we owned a little bit more of it, we're pretty much gold focused at this point. So look for us to be picking up some silver exposure, but trying to do that by staying in our jurisdictional focus in Nevada and Canada, and if we were to step out, looking at other safe mining jurisdictions. Because of our relationships in Nevada and our contacts, we've been able to purchase in the last 12 to 18 months royalties on some of Nevada's largest gold mines. And for a small royalty company, to be able to get in there based on relationships and pick up royalties that all the major royalty companies would love to have, we are really, I think, proving to the market that we can really execute here on our business model. So of those key assets that we have, we think 3 of them have the potential to be tier 1 assets. That is greater than 5 million ounces. That would be our Fenelon, in our one of our 2 Canadian assets, and then Ren and Jarrett Canyon. Our counterparties on all our transactions, both in our royalty portfolio and our property sale portfolio, are the premier companies operating in Nevada. We'll get into that a little bit more later, but that having the good counterparties when you're looking at royalties that you want to make sure get developed, having those strong counterparties, companies that have built mines and operated mines and are well capitalized, very, very important. On a performance basis, we've outperformed all the other royalty companies over the last 18 months very handily, but we'll make the case of why we think we're still early in our growth phase and still a lot of upside in the stock. And and a lot of that has to do with the fact that junior royalty companies do tend to perform very, very well in the early years. And like a royalty company, we operate with a very low overhead, and that overhead does not change as gold prices goes up. One of the beauties of the royalty model. And with everything, we'll get into the full portfolio, but just to sum it up in front here, that we are really now one of the largest property owners in Nevada by the number of projects. We have well over 100 projects between our royalty interests, our property sale portfolio, and our available for sale portfolio. This is the slide where we really show two of the largest royalty companies, and just to point out that fact that I mentioned there in our preamble, that while we've had great performance here in the last 12 months, you can see in the case of Royal Gold and Franco, Nevada, the circles there show the 1 year. The 1 year point for them, very similar action to what we did if you were to compress this into a longer term chart, which we will be doing here as the years go on. But you can see that in the case of Franco, that took a large jump, but then continued to march higher in its first 4 years, as did Royal Gold. Of course, both these companies have gone on to be great long-term investments as well. In the case of Royal Gold, this is a chart from 1994 to 1996, called 93 to 96, and it is from 30 cents to about $12. Of course, today that stock's about $135. The performance for us, and this is a big factor we talked about the execution of royalty purchases, and you can see that over the last year, both with the early success at Fenelon up in Canada, and Eric Sprott getting involved with the company, and then Eric selling us his Jarrett Canyon royalty, which we'll get into in more detail here in the presentation, followed by the VEK Associates, which gave us the Ren and the Marigold, as well as some development royalties at 3 other properties operated by Nevada Gold Mines, the joint venture between Barrick and Newmont. And then we also picked up the net profit interest on the Ren property. Again, a property we're very, very excited about. And then followed that up with the Borden Lake acquisition, and a move here that really got us re-rated. We were talking earlier in the year about how we were undervalued compared to our peers, companies like Methala and Abitibi Royalties. And today, while we're still valued lower than those companies, we're much closer. And again, with just as strong portfolio, we feel on a lot of different levels as our peers. Give a quick overview of the company as it stands today. This snapshot was done yesterday and midday. So at the stock, I think, is trading around, got as high as 165 yesterday, and then backed off today to the 150, 155 area. So the chart's very accurate here. This very bullish long-term weekly chart coming off a very big basing pattern over about 3 years, and then just really making a breakout this year, and then with a nice correction here off of our high. But 157 million shares, 197 fully diluted. On a fully diluted market cap, we're at about 290 million. We've got about 12 million of unrestricted cash and investments of about just under $1 million in stocks of some of our gold company partners. We've got a little bit of debt there on some transactions that we did, where we're paying them over time mostly for tax purposes for the sellers. and giving us a fully diluted enterprise value around 250, 260 million. And with our recent financing, we did pay down our line of credit that we have to Eric Sprott, so those funds are available. So all in all, we have about 18 million in equity in cash available for future royalty purchases here without having to do any more financing. This slide just shows for everybody, that something that Frank talks about. It's the beauty of the royalty model, and where you see the built-in growth in the royalties is that as you get larger on a market cap basis, and with your asset, based on the net asset value of your portfolio, you tend to trade it at higher multiples of NAV in the mid-tier range, and even higher at the major royalty company level. So, you you have that accretion that you see as the royalty company grows. You also see accretion in our portfolio because we have so many of our assets coming on stream over the next few years. So as time goes on, and those payments that cash flow from those royalties gets closer and closer, the net asset value of those tends to rise just because of the discounting of the cash flow. The junior royalty space, we talk about 4 key metrics that we think are important to look at when you're comparing the portfolios. And a junior royalty company, by definition, is generally cash flow deficient. It's those companies like ours and our peers where it's early in the stage of the royalties being developed. You're seeing royalties. In our case, we've got 3 that are paying, a couple more that'll start paying next year, a couple more that'll pay the year after that, and so on and so on. So we'll get into that more. But these key metrics, the first is the business model. And what sets Ely Gold apart, other than what we talked about before, is that important jurisdiction focus, is also the fact that we are both a project generator, that we sell properties and retain royalties, really the old-fashioned way of generating royalties. So we're not purchasing and spending shareholder equity on our longer-term exploration and most of our development royalties. Instead, we are actually generating revenue as we sell a property and getting property payments, generally over a 4-year option sale program, where we then retain the royalty. So this really sets us apart, we think, in the space, allows us a lot more flexibility, and we really, have flexed our muscles in Nevada over the last few years with when we first got hooked up with Jerry and then with Bill Sheriff, and we've just done dozens of transactions as far as selling properties, and it's gotten us involved in some very interesting projects here on the exploration side. And that speaks to the management execution. I just can't, it's just not the number of transactions, but as I was talking about early before everybody got on, is this transaction that we announced this morning, where we bought the 3 royalties from that famed old prospector, Ken Snyder. I mean, this guy has a mine named after him. That's how legendary he is. And it's all about Jerry's relationships with these people, that he can go out and get them to sell us the royalties that the big boys would covet. Yeah, we're able to do deals with these guys because of Jerry's relationships. So the other key thing is improving liquidity. I didn't point it out so much on the chart, but we'll look at it a little bit more on it. And it's just that our as our stock price has risen in the last year, our volume has gone up, considerably with it, to the point today where we'll trade, between 300 and 500,000 shares on an average day on each of the Canadian and the OTCQX. So, not uncommon for us to probably just under 1 million shares a day total trading volume. And then the last is what we call the clear path to production. And when you look at our portfolio, this is where it really shines. Is of our 11 key assets, and we define our key assets as mines that are either in production or will be in production in the next between 2023 and 2024. And of our 11 key assets, 9 are at producing mines and at some of the biggest, best operated mines in Nevada, and then of course the Wallbridge Fenelon properties. So only 2 of our 11 key assets does the mine actually have to be built. In the case of one, it's fully permitted, and the other is the Hog Ranch is in the permitting phase. So, when you also look at these, it's just not the assets. You have to look and say, okay, is this really a project that should get built and will get built? And of course, at these gold prices, most are starting to pretty much look economical. But also very important is who is on the other side of the transaction. Is it a junior company that's never built a mine before, never operated a mine, and probably doesn't have the capital wherewithal to build the mine, and they're going to have to go get out and get the money raised? Or is it a mid-tier or major production company that is going to build the mine, and and in our case where the mines are even actually already built? So going over the whole portfolio, and I'll drill down on the 11 key assets here as we go on, but we have 21 development assets. Now, for us, the development assets are a combination of some royalties we've purchased in packages over the last few years, and but mostly ones that came from our property sale, a royalty generation program. To be a development asset in our portfolio, the criteria is that the property has to be at or near a producing mine or a mine that's permitted for production. And so, these are ones where most of our development assets are at producing mines in the property or near the property, and in the hands of the company that's producing the mine. So very important, that distinction in our development assets and some of our peers. And the second is, or we then have our exploration assets. These are, as they are termed here, the longer term. Almost all of these are coming out of our property royalty generation property sales. 8 of them are currently being drilled by some of the top junior explorers, and this includes the BlackRock Gold, who will be on here later today or tomorrow, I think, and their success at our Tonopah project, and Contact Gold at our Green Springs project, and the list goes on and on. VR Resources with their Nevada assets. We have royalties on all of their properties there on the gold side. So some very good exploration assets, but these are the longer term ones. Then we just generally carry a portfolio of 30 to 35 properties available for sale. We do keep those in the cost down, the carrying cost, by owning just the key claims in a project. And then when we sell the project, we always get an area of interest, so that as the buyer expands the claim package, our royalty interest expands with that. So all in all, that's why we can, honestly say we're over 100 property interests in Nevada and the Western U.S. And I think as far as number of projects, maybe not number of claims, but number of projects, makes us one of the larger property owners in Nevada. This slide, of course, just shows who we're working with, and it's everybody. We're working on Kinross right now, and Hecla are probably two names that are operating in Nevada that aren't on this list. But otherwise, we're working with just about everybody who is operating a mine in Nevada. Let's drill down now and talk about the key assets. We have a 3/4% royalty on the Isabella Pearl mine, operated by Gold Resource Corp. That operation, the 3/4% is on the existing production and existing resources. We then have a 2.5% royalty subject to a 1% buy down on all the ground surrounding there. So they're drilling on our ground now with some good results, and so we think we'll be getting paid on that at a couple of royalties there over the next few years. At Jarrett Canyon, this asset owned 100% now by Eric Sprott. One of the first royalties we purchased was a per ton royalty on the production going through the roaster there. At $1,600 gold, we get 30 cents a ton. At $2,000 gold, that goes to 40 cents a ton. So we're toying with getting above that, staying above that 2,000 level for that to increase. But production is increasing there. They're only operating at about half of the capacity of that mill. And we'll get into that a little bit more of why we think that production will continue to increase. But based on current production and which has been increasing a bit, you can see the numbers there for payments this year and next year. Then the Jarrett Canyon NSR that we bought from Eric is a 0.5%. It'll pay us. We just got our quarterly payment, and these numbers, by the way, are in Canadian dollars. We just got our royalty payment for the second quarter before the big increase in gold prices, and that was over $275,000 for the quarter in U.S. So we're very comfortable that we're going to see these kind of payments out of the Jarrett Canyon. Then the Rawhide net profit interest, we were expecting to get payments late this year, but we've pushed that out into next year for COVID-related reasons. But that 15% net profit interest should be paying. And at these higher gold prices, they're going to be taking a lot more ounces than they originally thought out of the Regent Hill deposit there, where our royalty covers. Then Wallbridge, this is one that they had some more news today on more exciting drill results at the Cayenne zone. One of the zones they haven't even talked about, but in this deep drilling, now there's some contention in the street about Wallbridge. They are not talking about production next year, although they expect by year end to have their small miners permit. And I think we believe that while they have never said that when last year, they did say that they were applying for the permit and expected to produce when they got it. They're not talking about that now because they don't want the market to think this is a small 400-500 ton a day project. They want the market to realize this is going to be 100,000 plus a year project. But to fully explore that, and we'll get into that, they are going to have to go ahead and mine down another 6 levels to be able to really develop and make a mill decision. So we're very comfortable that starting next year, they will go back into production when they get that small mining permit. At Lincoln Hill with Coeur, we announced here just a couple weeks ago where we'd added another 1%, so we've got a 2% royalty there. They this spring got their permits for their leach pad expansion at Rochester, so they'll be building a 300 million ton leach pad right next to the Lincoln Hill deposit, and looking at production there at sorry, this thing's going crazy on me. At Lincoln Hill in 2023. Marigold 2022 production based on their current mine plan on our claims. The Ren deposit, they're in development now. We haven't gotten out there to see exactly what they're up to, but we're told that they are drifting into the Ren, towards the Ren deposit now. That's a 2 million ounce deposit that was outlined by Centerra in joint venture with Barrick in 2010. Barrick bought it out. They haven't done any exploration since. Their plan is to do all underground exploration and development there. And this, when you look at this Ren deposit as we drill down on it, has tremendous potential. This between this and Fenelon and Jarrett Canyon, we're just very excited that these are three, very potential for tier one mining operations. And the net profit interest would probably not kick in until 2024 at Ren. And then lastly, we have a Hog Ranch, which is in the permitting process. Recent PEA on that showed about 1.2 million ounces. Rex Minerals is an Australian company. And then lastly, the Gold Rock at Fiore, operated by Fiore Exploration. They're calling for late 22, early 23 production there. It's fully permitted, and they have all but made the decision to build that mine as a satellite to their Pan operations. So let's talk about these key assets a little bit more. Jarrett Canyon, we love this asset. It's known as the Widowmaker. Varus Gold went bankrupt with it in 2015. That's when Eric bought it out of bankruptcy. Since then, he's done a lot of upgrades and exploration. They actually closed the lower grade mine where they were hauling, and that's why production dropped off. But in the tonnage, but they concentrated more on the higher grade ore and stopped hauling the Starvation Canyon lower grade ore. So the SS Steer mine, they have now finished a new water treatment plant. And that's going to allow them to go deeper into some of the old higher grade ore in the underground, where they're averaging about 8 grams a ton right now, and there's places where they were mining up to a half an ounce in that underground, but they just couldn't go deeper because of the restrictions on pumping the water. So we're going to see them increasing there. They've also identified some open pit potential, and so we look for them to just continually increase and get the production up there. And on top of that, this is probably the best unexplored land package in the Carlin Trend. I mean, you've got upper plate rocks very near, lower plate rock, very near surface there. 2 or 3 windows into the lower plate rocks across the property. A large drill program that was executed by Anglo in the early 90s that was never followed up on, but just showed incredible potential for that package. Just a great asset, and we actually like to be adding to our royalty position at Jarrett Canyon. The Ren deposit, again, very exciting. I mean, this, you can see in the picture here, the Gold Strike mill and operations, and at the close to the property line here is the old Ren pit where they pulled some very high grade near surface ore out. But the big story on Ren was the discovery hole here by Centerra, 42.5 meters of 36 grams gold. Now it is at 3,000 feet, so the drilling there is expensive, and that's why what you have at the complex here at Gold Strike is here's the open pit, 35 plus or minus million ounces came out of that pit. Here's the underground operations, which was the Milky, the Rodeo, and then the Banshee mine, taking them with mine development underground almost all the way up to the Ren property line here. You can see the Ren deposit. That's the only of these different zones that they discovered in early there with Centerra. The JB zone is the only zone that they really then focused on to build a resource. So there's a lot of untested. The post fault, this blue line runs right through. That's what controlled all the mineralization at Gold Strike. And of course, it runs right through the Ren property, even splays off with cross faulting. And so the plan is to drift in from Banshee up in, mine the deposit there, but explore from underground as they're going through. They're also planning to drift over from the west at the north end, from the underground mine at South Arturo, and enter the property there and connect the two mines there, so they've got an in and out. Very excited here. This is 2 million ounces, but this was 13 million ounces that they found in this area down here, and we think the potential is that this type of mineralization, which was very consistent through here, could really expand the resource at Ren. The Marigold, just look at this quickly. It's these box shows, and the green shows the claims where we have a 0.75% NSR. It's two major deposits that this is the mine plan for starting in 2022, and to mine these two deposits. But we're also excited that at the north here, these two smaller deposits are already trending onto our ground here, and at the south, this large deposit down here is starting to trend onto our quarter section or eighth section claim there to the southwest. Let's talk about Walbridge some more. I've overlaid the existing infrastructure. Now, Walbridge put this in late 2018, 2019, when they had a permit for a 35,000 ton bulk sample. They went back to get another bulk sample permit, and the ministry said, no, why don't you just get a small miner's permit of 400 to 500 tons a day and quit coming back and bothering us for these bulk sample permits. So that's what they're working on. Now, here's what they did, is they did not mine all these stopes as they were going down 6 levels. Their goal was to get down to this 6th level. They mined this high-grade stope down here. About 2/3 of the 20,000 ounces that they pulled out in the 35,000 tons came from this stope. And their goal was to get down here and put this exploration drift in, so that they could come back in and start to do development drilling on the main Gabbro zone right in here. I'm going to have to update this with their press release today, but you can look at it. This area 51 here, this is where they're finding this Cayenne is actually sitting. I believe it's going to kind of show up down in here somewhere. But this is the Tabasco zone that they've showed these incredible results from. Now, to give you an idea of what they're doing is the development drilling that they are doing to fully outline this main Gabbro zone. They're doing with 50-meter drill holes. Now, these holes here that they're drilling from surface, and it's very difficult to, even from this 6th level, for them to drill because these structures tend to stand so vertical. And so that's where, we think while they don't want to advertise it now, when they get this small miners permit, they're going to come down another 6 or 8 levels. They're going to come down and penetrate this Tabasco zone, get to this level, and run that drift out through all those Area 51, so then they can drill define the Tabasco zone with 50-meter holes instead of 1,000-meter holes or 500-meter holes from surface. And as you go deeper, you have to go a step further out. You're drilling angled holes that are harder to control. It's very expensive. They are. We really believe they will do this development work strictly so that they can get down here, really define this deposit without from underground drilling, and so that they can figure exactly what they have to make a mill decision, because they will be hauling this over to the Camflo mill, which is about 100 kilometers. But they also get 99% recovery at the Camflo mill. So we think this is what they're going to do. They won't say that's what they're going to do, but they certainly won't say that it's not what they're going to do. They just don't want the market to think that this is going to be a 400 or 500 ton a day operation longer term. The key assets then drives our revenue slide, which is showing that nice growth in the royalty revenues starting next year, adding on in 2022, and then really jumping up in 2023. The blue line is our sale revenue, which is pretty consistent. We have contracts, 4-year contracts, some that are rolling off in 2021, others where the property payments are going up in 2021. But that's why we strive to keep this fairly, around that $2 million a year level, which covers most, if not all, of our overhead, so that royalty revenue, drops down to EBITDA and is available next year for a dividend program. I jumped through you guys can look at this. I think most people know who we are. Everybody knows that we not only achieved all our goals last year, but we've already achieved all our goals for this year in the first half. So we'll just I guess what we're going to just say is that we're going to shoot to double these goals and for 2020. That's really it on the presentation. I've got a few more slides if somebody has questions about some of the other assets in the appendix, but that's just really it. We think there's still a lot of upside as this company grows, and it's shown by the comparison to how the major companies did and other companies did in the early years, and we think we are on track here to continue to show shareholders, create shareholder value. And the stock, it did run up to $2. It's since pulled back to earlier in the week. I think it was down or late last week, got down to around $1.40. Had a nice jump yesterday and then backing off again today, but we think it's at a pretty good entry point here. So with that, I'll hand this back to Brandon, and we can get through some Q&A here in what time we have left.
Absolutely. Trey, I appreciate the amount of detail you're going into this. I know a lot of investors, they see a lot of investment decks come across their email in front of them, but it sometimes takes sitting down with one of the executives, one of the people from that team, and really going through what it means to really understand the opportunity at hand. So I appreciate the time you've taken there, as I can imagine many of the investors in here do as well. But handing over to the Q&A aspects, there's one question here. I really like this one. Joanne put this in for another investor who had this in the chat function. I go back to check the name, but it says, the staffing at Ely is very minimal, though very experienced. Would this suggest the goal is to have a major purchase Ely in 2 to 3 years instead of developing the company into the next Royal Gold over their 20-year stretch?
Well, look, we're a public company, so we are it would be up to the shareholders whether or not we were acquired. In the meantime, we just continue to grow this company, and quite frankly, Jerry and I have been able to do this. We do have a lot of good part-time help in Joanne, of course, doing the IR and keeping us honest in our press releases, and Steve Kenwood, our QP and corporate secretary, takes care of everything in Canada for us at the office there, that we share with Klondike Gold, and so we are probably getting to the point where we could be looking at a full-time CFO. Right now, our accounting firm fulfills that CFO role, and we could maybe add someone there. But where we go and whether we are the acquirer or we get acquired, or our goal is to continue to grow the company and create shareholder value. And certainly, if you look at the slides that that we show early on about the way that royalty companies are valued, it certainly is possible that you're going to see M&A activity where major companies can come down and purchase us. Our portfolio would fit very well with either Franco Nevadas or Royal Golds, and our market cap right now, we're trading a little over 1 times our net asset value, and those assets in their portfolio would trade closer to 3 times net asset value, if not above. So, it is one of the one of the positive aspects of the royalty business.
Absolutely. Appreciate the answer there. Let's look at some of these other questions in here. This is a good one from Miko. He says, at how low of a gold price will Ely still be profitable? And do you have leverage in rising gold prices?
Well, answer the second part first. We have total leverage to the gold price. I mean, our costs do not go up. Nothing changes in our except that the revenue that we see from the royalty stream increases with the increase in gold prices. So we are also leveraged in the fact that our property portfolio is more valuable at higher gold prices. We're doing more property sales because exploration juniors are able to raise money again in the market, and so the Tonopah is a good example. I mean, those BlackRock guys a year ago probably could not have raised the money to even put that first hole in, but the market has opened up there, so we offer good leverage to gold. And on the downside, I mean, we think that gold could, if gold even went back, we were looking and making our projections really earlier this year at $1,700 gold. So if gold were to pull back even that far, it's going to affect our revenue. But as far as our profitability, I think we're looking at this company being very profitable, certainly next year.
Absolutely. We'll go through a few here because we do have a little bit of time to answer a few more here. We have probably about 6 or 7 minutes, Trey.
Yeah, sure. Go ahead.
Another question in here is, let's see what we've got here. Just want to make sure I get to many people. I like this one here. Can you review again what makes up the $2 million sales revenue annually? asked by Wortman.
Okay, what we have right now is about 22, 23 contracts. We've got a few that we haven't announced. Not everyone gets announced because they're not all for one reason or another we don't release the news on them. But now those contracts typically are done over a 4-year option plan. Now, it's not a joint venture. We don't do any joint ventures. We're selling the property 100%, and if all the payments are made, we deed the claims to the purchaser, and they deed a royalty back to us. And if they don't make all the claims, or excuse me, if they don't make all the property payments, we get the property back 100%. There's no earn-in. Anything like that. So if you look at that portfolio, it started with property sales in 2016, 2017. The 2017 contracts will be rolling off next year, but then we've added more contracts that are stretching out 4 years, and those payments all accelerate. So while none of them have huge back-end payments, the payments do accelerate every year. And so that's kind of where we keep that $2 million in revenue. That's not a projected number. That number is the total sum of the current contracts that we have out there. And while some of them may get dropped, so that revenue is a little squishy, we're also very active in doing additional sales. So we think keeping that goal of keeping that sale revenue at $2 to $2.5 million a year is very doable for us. We could in this market we could actually start doing better, but and like I said, that covers most, if not all, of our overhead.
Absolutely. And here's another one on the constructive side of things, Trey. Barry writes, is there a reason Bill Sheriff, I believe being an insider, has little faith in the future of Ely if he's constantly selling of his shares? Do you have any comment on that this investor's asking?
Oh, anybody that knows Bill, Bill's a trader, and I mean, he's started selling his shares. He got most of his shares when he sold us his properties in 2017 in the way of warrants. And so those warrants had to be exercised. So he started out selling some shares to pay himself back for the cost of exercising. It's just Bill. I think he actually has a lot of confidence in us as a future, but he just built a new house in Colorado and moved, and he's had some personal reasons for selling. I don't even know what all they are, but I don't think it has anything to do with whether Bill has confidence in Ely, and he still does own quite a few shares.
I appreciate taking that question and the answer as well. Another thing here is this is from Robert. This may be one of our last questions for this period, but it says, the current management has done a great job. What's the vision that Wagner and Jessup bring to the table? What's the expectation you have of those two? And forgive me, I may have got that second name a little incorrectly there.
Well, start with Jason Jessup. Jason's actually been working with us for quite a while. He's actually brought us the Jarrett Canyon PTR royalty, and I can't think of the other ones, but he's been involved in quite a few. He does the third-party write-up for the board when we're, when we're considering something. He of course worked for Premier Royalties and Sandstorm in sourcing royalties. So Jason's, he's got a mining background, actually worked underground mining, worked with companies and planning and we're building mines. So he brings that expertise. Darren is one of my oldest friends in the business. I just have so much time for him. I mean, he's successfully built and sold 2 companies since I've known him, and of course been also major participant in Mag Silver early on, and continues. He's now on the board of VR Resources. So as we expand into Canada, we do not plan at this time, unless we saw something, really exciting, to try and replicate the property generation and property sale royalty generation model that we do in Nevada. But it's always on the table, because we do see a lot of opportunities of companies that we could purchase that have a portfolio of royalties as well as properties that have been property generators. But also, just in looking at royalty opportunities and the expansion and the blue sky in the property, Darren knows Canada as well as anyone, as an exploration geologist, because of his work at West Timmins Mining, which was sold to Lakeshore, that was then sold to Alamos, and then the Balmoral, of course, where that was just sold to Wallbridge. He knows these projects, a lot of them off the top of his head. He knows a lot of these companies where they've looked at possible mergers and acquisitions from over the years. So Darren just brings a wealth of knowledge, more on the geological exploration side. So between the two of them, we can evaluate a project and a royalty very quickly in Canada. And, while with Bill, Jerry and Bill and myself, we can, evaluate those Nevada properties, and with our large database, we just don't have that same database in Canada. So that's the reason for that.
And I appreciate that, Trey. And forgive me there, as we're at 11:29. So we're going to be moving over to our next webinar, which will be Chakana Copper coming up. Trey, thank you very much for your time, taking the questions from these investors as well. And just a reminder to everyone, we will be recording these webinars, and they'll be sent out shortly after this conference concludes. So Trey, again, thank you very much as we end this webinar today.
Okay, thanks, Brandon. Thanks, everybody, for tuning in. And as always, if anybody didn't get their questions answered here, you can send me an email, send Joanne an email, but we're always available.
Perfect. We have about 7 seconds here before we switch over here. So again, Trey, take care.